Welcome to the YouTube channel, The Executive Outcomes. My name is Michael Mwansa Dioba. I'm here again to look at another interesting topic in taxation concerned with how to negotiate for fiscal incentive by an entity. Now, for any organization that especially is looking forward to outward investment, you find that upon reaching that particular country of destination, the tax regime can spell out different tax obligations. Now, we normally look at what effect that will have on the bottom line, which is in the income statement, particularly how does that affect the profit or returns of that particular organization. So in most cases, you might be faced with an opportunity to negotiate for tax incentives so that you have several reliefs that can help you to improve the bottom line. So as a matter of introduction, I look at fiscal incentives to refer to tax breaks, or referring to tax breaks or exemptions or preferential tax treatment that can be offered by a sovereign state to encourage specific economic activities. This is quite common in most sovereign states. In Zambia in particular, fiscal incentives are governed by various laws and regulations, which include Income Tax Act, Customs and Excise Act, and the Zambia Development Agency in this respect. What type of fiscal incentives can you find? A number of them can be looked at, which include tax holidays, import duty exemptions, and loss carry forward. For tax holidays, when you hear of tax holidays, what should come to your mind? Basically, tax holidays can come in form of exemption from corporate income tax for a specified period. So you find certain entities might negotiate with a sovereign state to maybe waive some of the taxes over a specified period of time. Now, we can also have fiscal incentives which come in form of investment allowances. This can be in form of deductions or credits for capital investments. Okay, so deductions or crediting on capital investments can come in form of capital allowances. We have several types of capital allowances we can talk about these investment allowances. We can talk about capital allowances when you are looking at area of implements, plant and machinery. In Zambia, generally the capital allowances attract a rate of 25%, whereas for those that are found in manufacturing, tourism, leasing, the capital allowances on implements, plant and machinery attract 50% rate. Whereas for those in farming activities, they might attract an allowance of 100%. We also have fiscal incentives in form of import duty exemptions. Okay, this can be a reduction or waiver of import duties on machinery and equipment. For instance, in the Republic of Zambia, when it comes to importation of farming equipment, there are certain waivers that importers are going to enjoy, so that they are encouraged to import these equipment to boost agriculture activity in Zambia. Another tax incentive can come in form of VAT exemption. This is where you get it as a relief from value-added tax on specified goods and services. We also have a loss carry forward as a fiscal incentive. This is where you are talking about an entity or a taxpayer that has suffered a loss in a particular financial year, to be enabled to carry forward this particular loss to be offsetted against the profit of the future accounting periods. That way, you find that the taxable liability will be reduced. That comes in form of, or that qualifies, or that actually amounts to an incentive. Okay, loss carry forward. Of course, there are certain restrictions that are made. For instance, in this particular kind of business, you might be restricted to carry forward the loss to a maximum of 5 years, not later than 5 years. After 5 years, if the loss is not exhausted, then it is lost. That incentive is lost after 5 years on that loss, which was incurred 5 years ago. That's how it is applied. Now, the other thing we need to look at is who is eligible for these tax incentives. Okay, now businesses must meet specific criteria to qualify for fiscal incentives, such as size, as you can see, as sector or geographical location. Government will actually make certain decisions to encourage certain economic activities in certain particular sectors. So this will be driven by the government policy. So you find that maybe the government wants to take development to a specified area. So in that area, like in Zambia, we have what we call economic zones. So what the government is trying to do is to shift economic activity from these other concentrated areas to these areas where the government wants to take development. For instance, in Zambia, we have Lusaka province. Lusaka province happens to be where the Lusaka city is, and the Lusaka city is the capital of Zambia. Now, Lusaka province apparently is the smallest province of the 10 provinces in Zambia, and yet it has the highest population because the activities are concentrated in, the economic activities are concentrated in Lusaka. So an effort by government to try to spread these economic activities to other areas are made by making sure that there are certain incentives that can encourage investors to go out there and set up businesses there. So you find that there are these tax incentives that can be thrown their way so that they are encouraged to go and set up business or economic development there to decongest the Lusaka district and particularly Lusaka province. We also have an entity to look at various requirements which may depend on the type of incentive sought. Okay, so these are very important. When you are going to negotiate for these tax incentives, you have to look at an introspection of this your entity and find out whether you qualify for these incentives or not. If you have not, make good so that as you go to face the government officials, you are sure that you won't be found wanting in these particular areas. So it's important to make yourself eligible and be knowledgeable about what is the criteria government is going to look at for you to qualify for these incentives. Otherwise, you'll be wasting your time. So how do we prepare for these negotiations? Is another very important aspect. Okay, how do you prepare for negotiations? Okay, it is important that you, the entity that is trying to win these particular fiscal incentives, make sure that you conduct a thorough analysis of businesses, needs, and potential fiscal incentives available. Don't go to the government officials or the government institution that is responsible for that. In this case, in our case, Zambia, we have Zambia Development Agency. Don't go there without knowledge of what type of fiscal incentives they are able to provide. Otherwise, you'll be asking them out of their means or out of their powers. The other thing that you need to look at as you are preparing for these negotiations is make sure that you review relevant laws. Have an understanding of what the laws of Zambia talk about in relation to what you are trying to seek for. Okay? Look at the laws and the regulations to understand the eligibility criteria and application process. Okay? So that when you are with this negotiating team on the opposite side, which is the government, you are going to speak with authority, and then the other side will know that you know what you are looking for because you are well researched on these particular matters. Thirdly, make sure that you engage experienced tax advisors or consultants who specialize in Zambian tax incentives. Okay? Again, this is in line with what I've just talked about. There's no way you can go and close a business properly if you don't know what we're going to be talking about. So in this particular case, it is important that the person who is going to carry out the negotiation is somebody who understands very well, for instance, the Zambian tax incentives or the Zambian tax laws, so that he can exploit on the opportunities that can avail itself in this particular scenario. The other thing that we need to look at is, after preparing for these negotiations, you should be comfortable with the negotiation process. How do you proceed on the negotiation? Okay. So what is important is to identify what particular important activities are supposed to be carried out to achieve success. Some of the things that need to be considered in the process is: one, identify the appropriate government agency responsible for granting incentives. As I've said, in Zambia, we rely on Zambia Development Agency, ZDA. So it is important to do that because if you take these matters to a government institution which is not knowledgeable about the issues you are talking about, definitely will be frustrated because you won't get your answers. So know where to go. That's the first point. Secondly, prepare a comprehensive proposal outlining the company's investment plan, job creation, and expected economic impact. Of course, when you are going to a negotiation table, you should go there to impress. So the only way the government of the Republic of Zambia or its agents will be impressed is for you to show that you are serious. And if you are going to be serious, you need to come up with an investment plan. What is it that you are going to do? What is it that you are planning to do in this particular country? Okay? Especially when it comes to your business, fighting for incentives, you take note of the fact that the current situation Zambia is facing is the unemployment. The unemployment levels are quite high. So it would be quite a plus if your entity, which is trying to ask for incentives, is going to actually reduce that problem of unemployment. So job creation could be something that can excite the government of the Republic of Zambia, for instance. Okay? And another thing that can be of importance is you should be very clear on the economic or expected economic impact your organization or your company is going to bring to Zambia. Okay? So because Zambia is actually hungry for looking at companies that is going to have an impact to grow its GDP so that its balance sheet can improve. Okay, so that's what is very important as well. Okay, furthermore, you should also consider engaging in transparent and constructive discussion with government representatives. Okay, be honest about what you are looking for, so that you can also get an honest answer from the other side. If you get appropriate information, to also assist you to make a final decision whether to invest or not to invest in Zambia, or how you are going to carry out your investment plan. Furthermore, it is important that you are prepared to provide financial projections, business plans, and other relevant information. Okay. Financial projections also give assurance to the sovereign state that you really mean business, okay, because they want to see how well you are going to transform or transition from the current position to where the position where you want to be. Mind you, the government of the Republic of Zambia, for instance, will be happy to grow the economy in that particular case, because they know that if the business is going to set up, then they are going to get taxes from that business. Okay. So those are some of the things that you need to look at as you carry out the negotiation process. The other thing that is also important is you should be above board when it comes to compliance and reporting. Okay, once incentives are granted, it is important or essential to adhere to all compliance requirements outlined in the agreement. Okay, normally you find that once you are given the incentives, there will be an agreement to be signed, and there are specific performances for both parties. So on your part, you make sure that you are compliant with all that you have agreed to. Otherwise, you might lose those incentives. Maintain also an accurate record, or maintain accurate records and submit periodic reports to relevant government agencies. That is important. Also, make sure that failure to meet compliance requirements is understood to lead to the revocation of incentives, as I already mentioned. So make sure that this particular aspect is religiously followed: compliance and reporting. The other thing that is also important is the aspect of monitoring and evaluation. Okay. Now, regularly, I've stated that regularly assess the impact of fiscal incentives on the business performance and local economy. Okay, so you remember you would have made certain undertakings when you are signing an agreement. So you make sure that what you promised is actually being realized. So you have to make sure that you keep an eye on how well your business is advancing, given that you are enjoying the incentives. Where necessary, make adjustment to business strategy if necessary to maximize the benefits of the incentives. Knowing that now you have the incentives in your hands and you are actually enjoying them, identify opportunities that can actually even enhance your bottom line of the business. So that's what is important. However, when you have been given these incentives, sometimes you must take note that risk and challenges might be faced by you. Okay, so what type of risk and challenges are you likely to face? Despite the fact that you have been given the incentive, doesn't mean that now everything will be rosy. Okay, there could be risks and challenges that you are going to face. Fiscal incentives may change, for instance, over time due to shifts in government policy and economic conditions. So you, as an entity operating in a particular sovereign state, the state might change tax laws which are going to affect you. So be prepared for that type of eventuality. Do some risk management or mitigation strategies should such type of changes take place which are going to affect you negatively. So we also have to look at the consequences of any political and bureaucratic challenges in obtaining and maintaining incentives. Okay, be prepared that you might face some political challenges or also bureaucratic challenges, and see how well you can run with it. So that's important in managing your business. So you can also look at there can be the potential for abuse and misuse of incentives that can lead to reputation and legal risks. So be careful when you are given those incentives to make sure that your management is not going to take advantage of those incentives and abuse them, which can actually affect your reputation. So now, this is what I can say about negotiating for fiscal incentives. just to end this particular presentation, I want to leave you with a case study where you are supposed to provide a real life example or examples of companies that have successfully negotiated fiscal incentives in Zambia or any other country of your choice. With that, highlight the positive outcomes and challenges they face during the process. Again, I'm appealing to you to please feel free to share on this channel your findings or your case study. Thank you for listening. Look forward for another interesting topic in taxation the next time we meet. Please don't forget to as well subscribe to my channel and like my videos. Thank you for listening.